Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news of a relief rally, and that has a look of being a bit premature. But first, the core data being released today is for January PMIs. In the US, the widely watched ISM1 actually moved from contraction to a very minor expansion, even if its employment subcategory remained negative. The internationally benchmarked Market 1 was previously expanding, but it turned lower on slowing new orders. American construction spending slowed in December from November, but it's still 5% higher than a year ago. Turning negative, however, was non-residential private construction. All this data, of course, before the influence of the Chinese virus emergency. The reopening of China's financial markets saw a very sharp fall in Shanghai, with equities there down an eye-watering 7.7%. And Chinese benchmark bond yields also fell sharply, as did their currency. But it wasn't the all-out rout some had feared, and the rest of the world seemed to breathe a sigh of relief. In fact, there was something of a relief rally in European equities, with most bourses up 0.5% or so. Wall Street is also in a relief rally at the moment, currently up 0.8% in midday trade. As a precursor, Hong Kong closed yesterday up 0.2%. Helping was a range of other PMIs from other countries for January that weren't as negative as feared. Most still were contracting, however, but the shift was minor, so far at least. In China, their central bank lowered interest rates on some wholesale transactions in a bid to keep liquidity flowing. And in Hubei, banks have trimmed loan rates to customers and keeping credit lines open. Some, however, officials in China still think the impact of the emergency will be only temporary. But still, China's asking the US for flexibility on its recently agreed Phase 1 trade deal to help it adjust. In Australia, building consents dipped and their factory sector contracted sharply, but at least they're feeling a little bit better because of house prices are rising. Not everyone is positive, however. The ASX 200 fell 1.3% yesterday, and the NZX fell a similar amount. In financial markets, the Americans are about to issue new 20-year Treasury debt as they raise money at a record rate to keep up with their trillion-dollar deficits. And the US Treasury yield will start today at just on 1.53%, up 2 basis points in a day. And gold has retreated today, down $10 to $1,579 an ounce as risk perceptions ease. US oil prices are still falling, down to just under $50.50 a barrel, and that's another $1 drop in a day. And the Brent benchmark is down even more to just under $55 a barrel. And the Kiwi dollar is unchanged this morning at 64.6 US cents. On the cross rates, we're holding at 96.7 Australian cents, and against the euro, we're firmish at 58.4 euro cents. The net of all these minor shifts leaves our trade-weighted index at just on 70. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.